This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Germany triggered an emergency plan to manage gas supplies on Wednesday that could see Europe's largest economy ration power if a standoff over a Russian demand to pay for fuel with rubles disrupts or halts supplies. Moscow's insistence on ruble payments for the Russian gas that meets a third of Europe's annual energy needs has galvanized others in Europe. Greece called an emergency meeting of suppliers. The Dutch government said it would urge consumers to use less gas, and the French energy regulator told consumers not to panic. The demand for rubles, which has been rejected by Group of 7 nations, is in retaliation for crippling Western sanctions on Russia following its invasion of Ukraine.
OPEC Plus sources said on Wednesday the producer alliance, which includes Russia, is likely to stick to its existing deal to gradually increase oil production, a view echoed by OPEC Secretary General Mohammed Barkindo. The sources, who spoke to Reuters on condition of anonymity, were attending a joint technical committee meeting that advises OPEC Plus on market fundamentals. The full ministerial meeting will take place on Thursday. Barkindo encouraged OPEC Plus members to stay the course regarding the group's decision, according to an OPEC statement. He also said that OPEC Plus members should remain vigilant and attentive to ever-changing market conditions.
Moving on to the top news in the energy sector.
Oil prices gained over 2% on Wednesday as another U.S. crude stock drawdown indicated tight supplies and investors worried about possible new Western sanctions against Russia. Brent futures rose $2.69, or 2.4%, to $112.92 a barrel by 1:22 p.m. Eastern Daylight Saving Time, 17:22 GMT. U.S. West Texas Intermediate, WTI, crude rose $2.88, or 2.8%, to $107.12. U.S. crude stockpiles fell by a bigger-than-expected 3.4 million barrels last week, cutting inventories in the world's top consumer to 410 million barrels, their lowest since September 2018, government data showed.
India will more than double the price of natural gas from Friday for the first half of this fiscal year, reflecting a surge in global prices, two sources familiar with the matter said, further stoking inflation in Asia's third-largest economy. India will raise the price of locally produced gas from old fields for April to September to a record high $6.10 per MMBTU from the current $2.90 per MMBTU, the sources said on Wednesday. It will raise the ceiling price for gas produced from more challenging fields to $9.92 per MMBTU for April to September from $6.13 per MMBTU, they added. India links prices of locally produced gas from old fields to a formula tied to global benchmarks, including Henry Hub, Alberta Gas, NBP and Russian gas. Next, we have the top news in metal markets. Russian gold miners Polymetal and Petropavlovsk warned on Wednesday of increasing hurdles in doing business, including higher operating costs and continued challenges repaying loans to sanctioned banks. Petropavlovsk said it was in early talks with its main lender, the sanctioned Russian bank Gazprombank, to restructure its debt after being unable to make repayments. It has also been unable to sell its gold. The company, whose top investor is Russian billionaire Sergei Sudarakov, said any restructuring of its debt would have to be within the limitations of the sanctions.
The Intercontinental Exchange is considering shifting the clearing of contracts that underpin global debt markets away from London, two industry sources said on Wednesday. A potential relocation to Chicago is being evaluated, the sources said, of a move that could stoke fresh concerns about Britain's post-Brexit role in global finance. Clearing has become a politically sensitive topic since Britain left the European Union, with Brussels saying that UK-based clearing houses such as IceClear Europe and the London Stock Exchange's LCH would no longer be able to serve customers in the bloc after June 2023. The EU wants to build autonomy in clearing and end heavy reliance on London.
We will now look at the top news in the agricultural sector.
A delegation from Egypt will visit India in the first week of April to facilitate wheat imports as part of efforts to secure supplies and tide over shortages at one of the world's biggest importers of the staple, Indian government sources said. Egypt, often the world's biggest wheat importer, is reeling from a surge in bread and flour prices after Russia's invasion of Ukraine closed off access to lower-priced Black Sea wheat. India, the world's second biggest wheat producer, has emerged as a leading supplier of the grain to a host of countries that are struggling with cargo disruptions and sky-high grain prices in the wake of the crisis in the Black Sea region.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.